What's up, everybody? Right before we get into the show here, just want to give a quick shout out for our next Blockworks conference coming up. Permissionless IV is happening June 24th to 26th, and it's a crypto conference all for the developers and builders in the space. We're going to be hosting it right in the heart of Brooklyn, New York, and it's going to be a ton of fun. There's going to be a lot of fantastic speakers, and the whole Forward Guidance crew is going to be there. Myself, Tyler, Quinn, we're going to be doing a live roundup. There's going to be some wicked community events. Come meet us, have a beer with us. Come see some of the awesome side events, some fantastic speakers. There's new ones being announced every single day. So go ahead and get your tickets. Use the code FG10 to get 10% off, and don't miss out. Nothing said on Forward Guidance is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice, or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. All right, everybody, welcome back to another episode of Forward Guidance. And joining me today is Vishal Gupta, who is the founder and CEO of True Markets. In previous parts of his career, he's been the head of exchange and markets at Coinbase, head of USDC at Circle during that launch, which is super interesting. And before he caught the crypto bug, he was also at Goldman Sachs, where he was the VP and head of US listed options. So very, very adept and an expert on all things derivatives. Vishal, it's great to have you on Forward Guidance. How's it going?
It's good to be on. Thank you again for the time.
Yeah, likewise. So yeah, we'd love to just start in terms of just tracking your journey, because it's a really interesting one. Obviously, like we were mentioning before we hit record here, a lot of our audience on Forward Guidance is pretty macro and market savvy, and starting to piece through a lot of the interesting innovations that are coming from crypto. So I would love to just hear a bit about your journey, because it's a really interesting one, and I think will be an interesting case study into some of the aspects of what you've been working on and what you're passionate about. So you started at Goldman. What were you doing there, and what were you passionate about?
Yeah, I mean, even prior to Goldman, I was an engineer in Silicon Valley. I worked at Cisco Systems as a hardware engineer. So I was like old school OG electrical engineer, computer engineer. Graduated into the .com bust. So I saw all the like Ferraris in the parking lot kind of go away during my internship at Cisco. I graduated into this .com bust, and I honestly didn't know what I was going to do. I moved to New York. Worked at a telecom startup for a little while, and that's really interesting. Only the fact that like two of my investors for the current company actually came from that, and one became a venture investor at RRE, and the other is the CEO of Prove.com. And so I ended up leaving the startup only when I got an opportunity at Goldman Sachs to join as a sales and trading analyst. So one of the first sales and trading analysts with a computer engineering background, maybe the first. So I was on the trading floor, but I was by education technical, and I grew up in that electronic trading world when, we're talking about pre-Flash Boys, like HFT stuff. This is 02. We were building out equity order routing. We built out some of the FX and future businesses, and I ended up really kind of running the US listed options business there. We learned a lot. I mean, I say we because I met my co-founder there 17 years ago. This is our fifth business together. He's ex-Goldman, ex-Coinbase. So we have a little bit of a team here. I just happen to be the guy that gets to go on podcasts, and he's the guy that codes everything up.
Sweet, right on. And so you were mostly working on derivatives and that sort of thing in the TradFi world. And what made you make the pivot into crypto? What was interesting to you? What was what got you fired up?
Yeah, I'd say in the TradFi world, we realized that the only innovation that we were seeing was faster and faster, and that didn't feel like innovation anymore. And again, I was in probably TradFi from 02 to 15 or 16. And I pivoted originally towards fintech. So I was an early guy at a place called Moneyline, which was an online lender, app-focused online lender, ex-Citadel, ex-Goldman guys, kind of building out that space. And I really, I've always been kind of gazing over at crypto as an interesting product class, and like looking at the market structure, I saw it as really immature. And I wanted to play in that. I wanted to build out a prime broker in the space, and this is way too early. And I think Bitcoin at the time was sub $1,000, and nobody really wanted to talk about it. I saw the exchange space as somewhere really kind of immature, and I saw that there was a lot of improvement that could happen. I got enticed by Circle. I joined as head of business development, but more importantly, head of USDC. It was just a white paper at that time. And I saw that as a good place for me to put my fingerprint on in crypto. And again, it was early stages. We didn't, there was many stablecoins kind of launching at the same time, GUSD, TrueUSD, a bunch of other stablecoins. And I thought that, being multi-issuer was important, being kind of free, which was super important at the time for mint burn, and also just being fast. We were the first to kind of code up to Silvergate Send. And I saw that as an advantage, and we were able to kind of get it out there into the market. And so I was just kind of drawn into like what I saw was a very immature market that needed a lot of maturity. And I think in one day I went from being the youngest guy in the room in TradFi to the oldest guy in the room in crypto. And I thought I could bring a lot to that.
Yeah, 100%. Yeah, definitely want to circle back on the stablecoins and what you did there and how you think about those today. Obviously, with the Circle IPO coming, it's got a lot of people talking about it. But just moving along in terms of your career, then you went to Coinbase and you were head of exchange there?
Yeah, so I joined as head of exchange. At the time, we were a U.S. spot market trading 20 assets. And, honestly, the infrastructure was pretty bad. It would fall over all the time. And our goal was to kind of like bolster that infrastructure. So Patrick, my co-founder here, was one of my first hires. Kind of, I think this current matching engine is built is a seventh matching engine. So he's been kind of building this stuff for a long time. And you need to kind of walk away from an old school, like, Coinbase's matching engine was built out of necessity, and it was built with, duct taping and gum to a degree. And we wanted to industrialize this thing to allow us to scale assets and allow us to launch derivative exchanges and all these other things. So like before I joined, we traded 20 assets. By the end, we trade 235 assets. We acquired a company called Farex, which was one of the largest acquisitions in crypto at the time. It was a CFTC regulated DCM, or an exchange. We launched it as Coinbase Derivative Exchanges and we took that engine, and within 6 months, and this is before FTX blew up, we made the decision to launch Coinbase International Exchange, a perpetual futures exchange. And we did that with no new hires and just the existing team. And I think that thing trades near 10% of perps market now.
Yeah, super interested to hear. I think just to really start to get into the conversation now, to really just level set with a simple question, which is, obviously you've been through a lot of different facets of crypto and market structure and exchanges and derivatives. You've seen a lot of it. And my simple question to you, and maybe it ties into what you're working on today, but what are some of the really interesting crypto innovations that are relevant for the TradFi world? Like, you often hear about this idea of, say, for example, Solana wants to be, just like on-chain NASDAQ in some form or another. And there's this idea of using distributed ledgers and blockchains to improve what already exists in the TradFi world. So what's your high-level view on what has been created that is useful and relevant and innovative for the rest of the world?
Yeah, I actually think that both CryptoFi and TradFi can learn from each other a lot. So there's like a lot of immaturity left in the crypto markets. In a post-FTX world, we still haven't figured out that, like, hey, we need to separate out execution and custody. So we believe in a non-custodial exchange. It's kind of like harkening back to like a little bit of separation here that is needed for where the assets sit and where they're being traded. And you saw this as a big concern post-FTX, right? So a lot of what we're building at True Markets is sitting in the non-custodial world, both as a qualified custodian holding things like Bitcoin, Ethereum, Solana, but also as looking at like MPC wallets and using solutions like Turnkey to be a non-custodial exchange in the DeFi world. So we're hybridization on many sides of this thing. I'd say crypto, I mean, there's so many interesting things that are happening, especially in like the stablecoin space. And we know that space is going to get even more interesting. Just using it as collateral and settlement in these structures are going to become really important. Like CeFi exchanges haven't really gotten it yet. They don't know how to use a stablecoin yet. One of the key things we did at Coinbase is unifying USD and USDC. So you can now use USDC or USD to kind of like fund your trades, use it for collateral. Now, what the natural evolution of that will be is as these stablecoins proliferate, you're going to see fragmentation. As you see fragmentation, you're going to need these platforms to speak not only one stablecoin, but all the stablecoins, and do so in a manner that makes sense. We're building that too as a stablecoin native platform. So you can come in with any stable that we manage. I think like, a lot of people get a little bit over obsessed with the idea of like, hey, we need to tokenize all the assets in the world. And like, we need to take them 24/7. Like, I agree we have to take things 24/7. Not every single one of these has to be tokenized. And, my mantra on tokenization is usually, you have to look at the utility versus the risk. So if you look at something like $1, there's like high utility for like tokenizing the thing. I can use it. It's better than a paper dollar. I can, airdrop it. I can get interest. I can get a bunch of things can happen on the utility side. I can use it for collateral and leverage. On the risk side, it's actually pretty low risk. There's no like regulator that's really going to come and like mandate you guys like freeze a bunch of these. It's less things are going to happen on the regulatory side. Now, in the Reg NMS like securities world, there's actually very low utility right now. Like, what am I going to use it for? Am I using it for collateral against a Bitcoin trade? Probably not. Like, that's not how Reg T margin works. It doesn't work, right? And then the risks associated are actually quite high because the SEC is going to get involved with every single trade at that point. Now, that doesn't mean we can't find a world where there's going to be higher utility and lower risk. But right now, the SEC is still not in a place where, that's going to make any sense.
Hey, everyone. This episode is sponsored by Ledger. For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through its Ledger Secure Chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Your entire crypto experience got a whole lot easier. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com. All right, back to the show. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research. Yeah, let's get into stablecoins. In there, you mentioned this idea of potential fragmentation, which is really interesting to me because, we're coming off the back of the Circle IPO. And so it just feels like suddenly the rest of the world outside the crypto world is waking up to stablecoins and trying to think through them and, use different analogs and think about how they are relevant to the TradFi world. And, heard a lot of takes of it just being a new form of a money market fund. So, what's your high level view on the outlook for stablecoins in terms of like adoption, fragmentation? It seems like, even just yesterday I saw a headline about JP Morgan potentially coming out with their own stablecoin. We're seeing talk of individual corporations like Walmart coming out with their stablecoin. So that's a really interesting situation when you look at just the valuation that Circle's holding at this juncture is pretty rich. In a world where if you assume a proliferation of a ton of different stablecoins. So what's your high level thesis and view for where we go?
Well, there's really two markets here. There's the US enabled market, the US domiciled market for stablecoins. So that's like a dollar coming from a US business that's housed in the US. That's USDC. That's USDC's world. And then you have the international space, which is largely Tether's world, right? So let's talk about the US space for a second here. And in the US space, USDC is 99.5% of the entire market in terms of market cap at this point, some very large number. And you expect the likes of PayPal, who already has a stablecoin, Stripe, all the banks, they're going to start to create their own stablecoins. Then they're going to make sense in different types of platforms, whether it's the OG use case for stablecoins was always like, I need to settle this thing, whether it's an OTC or listed trade, and I need to be able to trust it. And I also need the ability to like not necessarily touch dollar rails all the time. So like OTC listed trading settlement was number one. Using it for collateral for lending was number two. Payments was always kind of way over here, and it's still kind of being proven out. Like if you look at the actual like dollars in, dollars out, a lot of it's still kind of just being used for crypto use cases. Now, that pie will fragment. It'll grow, right? It's the U.S. domiciled, U.S. denominated stablecoins are going to grow in size, but you got to assume that USDC's share is going to get smaller than 99%, right? With that fragmentation, you're going to need infrastructure. And with infrastructure, you're going to need teams that are going to be able to speak kind of all of these things. And like, it'd be great if, Stripe and PayPal and, USDC can all like be used for collateral for like the first couple of use cases, right? And then, for payments and other things, you're going to need clearing systems. Like $1 is going to be the next dollar. The one thing I tell the team a lot is, the dollar itself is commoditized, right? The dollars are sitting in bank accounts. They're just regular dollars. The clients, like, they're just dollars, right? The middle layer where it's like, okay, there's a wrap around it. It's USDC, it's PYUSD, or it's another stable coin. That's non-commoditized. But let's say on the exchange level, like the client just wants to bring dollars in. And so that is also commoditized. So like what we're trying to do is kind of normalize the idea that you can speak many stable coins. And so our platform will do so. So, we don't want to pick favorites, but we have a default stable coin that allows us to use like one stable coin as a pivot point for all of our markets. But that's something that can change over time. But right now we use PayPal, PYUSD.
Yeah, interesting. So True Markets is obviously very much has stable coins at the foundation of it. And I'm curious if you think if there's benefits to that for other either brokerages or exchanges in the TradFi world to adopt in terms of, quick settlement, finality, collateral efficiency, those sort of things. Like, do you see a future where stablecoins get, utilized further by existing TradFi firms as well?
What we've seen prior to this year, or maybe even prior, the year prior, was that there was this regulatory capture of taking dollars into the crypto world in the United States. It was extremely hard to maintain the bank accounts or whatever, for FBO accounts. Only really Coinbase, Circle, Kraken, a couple other players were able to really nail down the kind of like the dollar fiat route. Right now, with the Genius Bill and a bunch of other things coming down the pipeline, you expect to see proliferation of dollars coming into crypto from different venues. And so as an exchange that's stablecoin native, we want to offer as many venues to get dollars in as possible. And we don't necessarily want to just be the only dollar in, right? So we want to leverage Coinbase, we want to leverage Circle, we want to leverage Stripe, we want to leverage PayPal, we want to leverage all of these stables in, and then we just kind of manage it on the back end. And again, that's where, again, regulatory capture, that goes away over time as we have clearer and clearer regulation, and we start to see real competitors come in to compete to get dollars into the market. You no longer only have to go to one exchange to get dollars and turn them into crypto.
Yeah, I want to hear a little bit more also about the derivatives landscape. So earlier in our conversation, you kind of hinted at perps, which as a format has been very successful in crypto, but is something that is less existent in the TradFi world. Obviously, there's futures and forwards and swaps and all of that, but it feels like for the everyday person, they're more inclined to use options and short-dated options, which, I've played around with both a lot over the years, and I feel like options are one of those things that seems simple on the surface, but when you dig deep, you're like, oh my god, I don't even it. Just there's derivatives of Greeks, et cetera, and it just feels like it's such a losing game for retail. And then, so there's this format of perps that is really interesting. So I'd be curious about how you think about the derivatives landscape in terms of what exists in the TradFi world. What are some of these innovations in the crypto world? And yeah, again, what can the two worlds learn from each other, especially with respect to perps, which is this thing that is so successful in crypto, but pretty much doesn't exist in TradFi.
Yeah. So, I'm a rare guy who's run options businesses for about 15 years. And I've also run some futures businesses, including a perpetual futures exchange. This is somehow my fifth crypto exchange. I help run Poloniex at Circle, Coinbase Spot, Coinbase Derivative Exchange, Coinbase International Perpetual Futures Exchange, now True Markets. And I'd say I'm also a derivative trader. I use them myself. So I would say for retail, there's a couple things that they want. And the one thing that kind of convinced the Coinbase board that we needed to launch perpetual futures is, number one, the U.S. spot market is only 4% of the global market in general, and perps makes up the vast majority of the rest of it. And perps are easier, to be honest. Perps, you settle dollars. You don't have to worry about chains. You don't have to worry about anything. You're just speaking dollar terms, and they're essentially levered IOUs. And now there's a bunch of dangers to a perp or any other future, especially when it's highly levered. In the CFTC world, you kind of stay in the 2.8 max, leverage. But in the perps world, we see exchanges that would be 100x leverage or whatever it is. And the reality is one bad print and you're liquidated. That feels really bad for a retail client. And I'd say that we have to be really careful of assuming that the volumes mean that this is the best thing for retail clients in general. And I'd say that in the US markets, like you said, the US options world, which was my old world, the US listed options world, is where it was built for retail. And it was built for, back in the 60s and 70s, CBOE, ISE. This was built for retail. And I'd say that we haven't seen a great option solution in crypto yet. Now, obviously, globally, you see Deribit, you see a bunch of other players, but in the US, it's extremely hard to do that. You're seeing options being traded on the ETFs. You're seeing a bunch of other things happening kind of under the hood. But for me as a retail, kind of adjacent trader, I would say more interesting for me to see going along a YOLO call that could be a year or two out. And I think, Bitcoin's going to trade at $250,000. I want to put that on versus kind of holding a 10x leverage that if I get a bad print, maybe I get auto liquidated and it feels bad. I would say that the innovation in the perp space is actually pretty limited. There's not a lot more to do there. It's kind of we're kind of in the final phases of what this looks like. You look at the hyperliquids of the world, that's a great matching engine that's sitting in the cloud that's using some sort of, I'm not entirely clear, but they're using some sort of non-custodial wallet that's kind of handle the settlement. that's the innovation. Their innovation is also asset addition, which is extremely hard. And like my gut is that these exchanges in time become less focused on like asset addition and listings that don't scale because you can only do hundreds of these things where you're talking about millions of assets, and you lean more into DeFi, which is what we're doing. So we're hybrid CeFi DeFi. Well, we'll list Bitcoin, Ethereum, Solana, all the head torso assets, but we'll enable SPL, EVM, base tokens, and kind of just allow you to trade the universe. We'll give you warnings if we think something's dangerous, but like I think that exchanges need to move away from being gatekeepers and saying, hey, this is an asset that's okay to trade, into gateways to new assets. And like we can kind of warn you of things that are happening, but we should be able to enable all assets out there.
Maybe we can dig a little bit deeper on the evolution of crypto options specifically, because it's been quite interesting over the last couple of years, and I'm curious your read on this. So the way I see it is there's like three main buckets for it. There's the on-chain options protocols that have been trying to be innovated. There's the derivative version of it, which is a bit more of like a traditional, centralized version of it. And now we also have these, either ETF based options chains like, IBIT options, that sort of thing, as well as, options on crypto related equities like Coinbase, MicroStrategy, and now Circle as well. So yeah, how have you seen the evolution of that? Are we starting to see, more activity shift towards options and away from perpetuals now that there's more options available? And how do you think about those three buckets? Because, when I look at something like on-chain options, the spreads just look horrendous because the liquidity is just like not there. Derivate's been good. Spreads on BlackRock ETFs are really tight and nice, but there's obviously a lot of different ETFs. So yeah, what's your read on it?
So let me break this apart a little bit. The one thing I'd say is that in the US, getting spot exposure to like even Bitcoin, Ethereum, and Solana is extremely hard. Like you're still paying 200, 250 basis points as a retail client to go to like a large, exchange to buy Bitcoin. It takes a lot to get there. And it's like, do you trust the custodian or like, how is it being set up? Is it, who's actually holding the assets? Are you putting there's a bunch of questions you're going to ask yourself. So even just getting spot exposure is quite hard. Right. And then you're talking about derivatives, and you obviously the internet, like whether it's on-chain, off-chain, settled wherever it might be, you're going to have different problems with like market structure. So the one thing beautiful about the US equity listed options world, and I think there's like 12 to 15 exchanges out there, and they have like very mature markets there. They've been trading for a long time. And again, that's my old world where you'd see like everything from price time, maker taker, pro rata, like all these different market structures that are built to incentivize market makers to intercept a retail order. Like, so that's where the payment for order flow businesses come out of. That's where Robinhood makes half their revenues. And so the IBIT like options markets are going to be much better than like you're going to see in like, an on-chain options market. It's just not going to work because there's no real competition. There's no reason for the market makers to kind of like step up and give you a proper market. So like there's a bunch of things that like the retail client doesn't know, which is essentially the market structure will drive your prices. And if you have wide spreads and you're saying like, this is going to cost me a boatload to execute, you're probably not going to do it. I'm bullish of like getting more and more of our options in these like listed worlds. And so you're going to see these proxies to spot that are going to be really interesting in the US. And I'm hyper focused in the US right now. I think there's a lot of opportunities globally, but I think that there's a lot to do in the US space. There's 4 exchanges in the US that make up 99% of the volume in spot, and Coinbase is 75% of that business. And I was lucky enough to be at the helm of that through IPO. We took it from 35% of US spot to 75%, like big moves. But the reality is there was no real competition. We probably could have taken it to 90% with not a lot of work, because we could charge whatever we want and nobody's keeping up with us. I think we now live in a world where there should be many exchanges in the United States that you can trade spot, and we should be competing on pricing and product and a bunch of other things. And my hope is that, like the stablecoin pie, this also fragments more in the US spot market, which is why we're building what we're building. Like I had a really great job. I loved working with Brian and team. But the reality is I had a lot more ambition to kind of like build what I thought would be the next phase of crypto exchanges.
I'm curious too, just double clicking a bit more on your derivatives expertise, is something I've noticed is throughout this shift from a derivatives world that was so dominated by perps to now this world where we have this proliferation of further options. I'm curious if you've seen a change in the price action. So obviously, like it felt like the last, especially like last cycle, like 2020, 2021, so much of the price action was dominated by like open interest growth / decrease in funding rates. And that would feel like the big driver of price. And I'm curious if you've seen over the last year and a half this increase in price being driven by options flows. So either, dealers hedging and gamma flows, either being long gamma or short gamma. And if you've seen a change in the price action because of that shift towards a broader proliferation of options.
Yeah, and number one, I should state very clearly, as an exchange operator, I actually don't trade crypto. Like I've been at the helm of one of the largest exchanges in the world. I would get paid somewhat in Bitcoin. I had some Ethereum and Solana, but that's just like in my past. Like I don't trade actively on purpose. Like I think that as an exchange operator, you should be able to say that. And if anybody knows me, they know I'm a trusted person that can run an exchange. And in this world, I think that's really important to say that. Now, I'd say what's happening in terms of price action in crypto, I mean, there's a lot of things there. The one thing I'd say is in the spot markets and the derivative markets, you're seeing the vast majority of the trades, the actual volume is coming from systematic traders that are managing ARBs or managing hedges. They're doing a bunch of other things there. There's no reg and a mess where in the US and the equity world where it would mandate the best bidder offer on these exchanges or route away. In the US and globally, there's always an arb between the spot markets and the perps markets, and people are just systematically trading. And if you look at the fee schedules, while at retail you're trading maybe at 200, 250 basis points, and the systematic side, you may be taking liquidity for sub basis points. Like it's like, so there's a lot of opportunity, like where you as a systematic trader can just like execute trades and maybe barely make money, but on a trade by trade basis, but you're doing millions and millions of trades. At some point, you're making a ton of money. So I think a lot of this is being still driven by systematic traders. And there's like, especially in the US, there's very few retail traders that are going to diving in and market buying like, a full Bitcoin through an app. But I do think that that's where the market is. And I think there's more opportunity, right? Like there's a lot more opportunity again, it's really hard to get spot exposure in the US, and that's what we're trying to offer. By the end of summer, will be the easiest in terms of like interface, will be the cheapest in terms of cost, and will be the safest platform to buy Bitcoin, ETH, Solana, SPL, EVM, and base tokens. We can do that. We're a small team. We're about 10 people. We're not 4,000, 5,000 people, and we're running an exchange, an app, and a bunch of other things.
Hey everyone, this episode is sponsored by Ledger. For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Your entire crypto experience got a whole lot easier. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com. All right, back to the show. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research. Yeah, I'm curious, just like circling back on this idea of blockchains for taking on TradFi assets onto crypto rails. Is there anything that you're super excited in terms of asset class? Because whenever we hear about that, I feel like the shorthand is just to go to, getting Mag 7 equities on chain or whatever. And, those just have so much liquidity. It's so easy to buy them overall. But I'm always interested in hearing about some of the more exotic asset classes, things like, the fixed income world is almost entirely like OTC. And then like commodities have a lot of different nuances too. So I'm curious if you've explored or how you're thinking about the innovation for some of these more exotic asset classes and maybe that there's some benefits for that.
Yeah, so I think this goes right back to the equation of utility versus risk. And like one of the projects that we had shelved at Coinbase was to launch CB Gold, but that became the impetus for us to launch, CB ETH and CB BTC and all these other things. Like we were trying to at some point I was convinced, as we're doing Amazon of assets at Coinbase and trying to scale the number of assets we were launching, I told Brian and Surjit, who was the chief product officer at the time, and like even Netflix at one point had to have their own movies. So at some point we have to create our own assets. And I thought that was an important thing to do. And if you look back at the FTX world, they were doing leverage tokens and a bunch of other interesting things that they were trying to do. Obviously bad corporate governance over there. But I think, honestly, I think that if I had to predict where we're going to go into tokenization, it's going to be assets that are have high utility. What can I use it for? What can I use it for collateral? What can I use it for settlement? Dollars made a lot of sense. Gold could make sense. Oil, stuff like that could make commodities in general kind of make sense, as long as there's like low risk and high utility. I was part of the team that kind of drove the securities business at Coinbase and the ideas around that, and we kept kind of butting up against the why of like, why are we doing this thing? Why are we trying to tokenize this asset? If it's just a trade 24/7, I can do that without tokenization. So let's make sure we're not just like shoving a product, like shoving the solution into the problem. Let's like solve the actual problem. And that's like, again, why I launched True Markets. I want to like really take 24/7 markets to everyone, everywhere globally. That includes securities, that includes everything else. And like tokenization is super important, but we shouldn't be just shoving the solution at every product.
Yeah, that's often the case. Is there, like what other problems do you see out there that are ripe for solving? Whether that's related to True Markets or just in general for the industry?
Yeah, I think that the idea of like, so one of my favorite quotes for markets in general was like a novel quote that was, he said that a group of people thinking the same and coming to consensus as a mob, and a group of people thinking differently and coming to consensus as a market. So like there's this idea of like there's truth within markets, and I think that what Shane and on the Poly Markets team and the Kalshi team has really kind of scratched the idea that like as media has become less like easy to trust, looking at a market and saying, hey, this is going to happen or this is going to happen. I think prediction markets have been very interesting. I think that what they've done there in bringing that idea mainstream, and again, we haven't seen the volumes, we haven't seen the open interest, but we have seen the eyeballs. I think that's really interesting and showing that there is like truth in markets. And that's kind of how we came up with the name True Markets, that, the truth can come out in markets. And I think that just building markets infrastructure is really important. Building a 24/7 infrastructure that I could white label to give to any of these next markets is really important. Giving them liquidity services and all the other things that are needed. Like, I think we'll have an AWS moment for markets, and that's matching engines, that's cloud solutions, a bunch of things that we want to build. There's settlement solutions, both to a qualified custodian and on chain. Like there's a lot of stuff to build there. And if you're building the next prediction market, you shouldn't have to start from scratch all over again. So I think that like just market like infrastructure is really interesting, especially in a world where like AI is taking over. AI is going to be at some point, one AI is going to talk to another AI and want to like transact with them. They're going to need to use something like USDC and wallets. They're going to need to convert those things. They're going to need to be able to buy and sell things. At some point, all of those APIs, whether on-chain, off-chain, fixed, they're going to want to patch into a patchwork of markets infrastructure. So True Markets is a markets infrastructure team. We've got matching engine, we got CeFi settlement, we got DeFi settlement, we've got order routing, all kind of built into this hard tech, and then we have an app sitting on top. But like, if you want to code to our infrastructure, you can come in at any level, on-chain, via Fix, as a user or as an institution. So I think market infrastructure is just going to keep evolving, and I think that we're the first ones that are outside of the New York Stock Exchange, NASDAQs of the world. We've been around for hundreds of years, and outside of like the Coinbase and Binance of the world that kind of like fell into markets, we're the first ones that have kind of done both worlds, building some of the first ATSs, building some of the really interesting things in equities and options, and also helping run some of the biggest like crypto businesses, and just saying, hey, let's take a step back and build beautiful market infrastructure and just deploy it wherever we can.
I was just thinking there, do you think there's anything for taking companies public that is interesting from the crypto's perspective? Because just thinking through the Circle IPO, and whether it's an IPO or a direct listing or a SPAC, the whole process just sort of feels archaic versus what could be like technologically possible. And I'm curious if you've thought a bit about that and where the use case or role would be for just like taking companies public, and that whole process just feels like something that could be revolutionized a bit.
Yeah, I mean, it's funny. As a markets guy, you would think I would want everything to be in public and everything should be like publicly traded. And the reality, as a startup, I would say that there's a lot of benefit to not being liquid sometimes, like liquid, like having a price attached to you. We raised our first seed round when I think Coinbase was trading at $50, and if you try to just like draw the straight lines to a startup that's like sitting in the same world, like it's really hard to say where your market cap should be or where your valuation should be. It seems illiquidity is actually a feature, and like kind of like letting venture kind of price something is very interesting. I do think there's moments of liquidity that should happen, and they should find real price. We should find the prices the right way, whether it's through auctions or having a listed order book are two different things. You see all these secondary markets for like startups. I think that feels inefficient. So finding efficient pricing is going to be really important. Whether it's crypto or traditional equity, which was Circle's IPO. I think, by the way, the only thing crypto about Circle's IPO is that it was a stablecoin business, and if anything, it just shows that there's like a lot of bid on buying crypto companies out there. So that's why you're seeing everybody from Justin Sun to everybody else saying, "Hey, let's go public," right? But to do it in a crypto native way, I think that there's a big question around that, and that also delves into securities and whether or not they should be tokenized. And again, as long as the utility is high and the risk is low, let's tokenize the world, right? And what we need to do is kind of work on the utility needs to build, and we need to lower the risk. And that's our goals there. I do think I'd love to see clear regulation around like utility tokens and things like that. So like Amex points, like using them within our systems. Like we talk about point systems, talk about like Amex points are not equity. Like that's very interesting to me. I think the equity being tokenized is also interesting to me, and kind of launching in a world where we can do both would be amazing. I do think that not every startup day one should be like a listed trading. I shouldn't be trading true markets yet. Give us a couple of years.
Yeah, that's such a great point, because I feel like we sort of learned that in, especially years ago, like the ICO mania, where it just felt like everything needs to go public, and then you realize that maybe there's a good reason why like a brand new company doesn't get marked to market every single second. That's the job for the VCs to hold that risk. It does feel like there's a medium there to walk.
I mean, I like the idea of like an auction. Like, let's say if I'm doing my Series B or something like that, and people want to join in, and they, maybe there's a more like transparent way of doing a later stage like raise. Like, I'd love to do something like that, but I don't know that that's my job right away. But like, I think that that's a very interesting way of thinking about it. Like seed series, like our seed investors, I've known for years, and like we had a very competitive bid out there, and it was great to find prices intelligently kind of behind the scenes. I don't think I'd want to take that to an auction. I feel like that's not the first place to start. Now, someone could prove me wrong and could say, hey, like, let's raise $10 million in an auction. Like, I guess so. Let the market find its way. But I like the investors that we have on our cap table. Everybody from PayPal to a bunch of great investors that like help us as we kind of move forward into the market. And I wouldn't get that if I just like had an auction with 1 million investors come in.
Well, Vishal, really great to hear about your journey, some of the nuances of the derivatives market area, what you're up to at True Markets. If everybody liked this conversation, Vishal's going to be at the Permissionless conference next week in Brooklyn. I'll be there hosting 4 panels, so it's going to be a busy week. Definitely get your tickets. And yeah, Vishal, just want to thank you for coming on Forward Guidance. Really great to hear your story and what you're passionate about.
Yep, I appreciate it. Thanks again.
Awesome. Thanks.